Hi, this presentation is to cover Massachusetts tax returns for tax year 2018. This presentation will cover the core topics. There are 3 additional advanced topics which are covered in a separate presentation. Now, some new items for tax year 2018. There's some key federal changes that are applicable to Massachusetts. Entertainment and business expenses are no longer allowed. 529 education plans now allow up to 10K for elementary or secondary school expenses, and medical deductions greater than 7.5 AGI are deductible on Massachusetts. Changes from 2018 federal that weren't incorporated. Job-related moving expenses are still allowed if the requirements are met. Reimbursed moving expenses are not taxable in Massachusetts. No deduction for QBI. There is a penalty for failure to obtain health insurance, and alimony is still deductible for the payer, taxable for the recipient. These last 2 are changes for 2019 and beyond, but again, Massachusetts has not incorporated the changes that were made for federal. Okay, there are 2 basic forms that we use for Massachusetts tax returns. There's the resident form, Form 1, and the vast majority of tax returns that we'll do will be Form 1. Non-resident for resident tax returns. Non-resident or part year is going to be Form 1NR/PY. Now the part year will allocate income proportionally between resident time and non-resident time. The non-resident income is not taxable to Massachusetts while non-resident. Deductions and exemptions are reduced proportionally for non-residents, and non-residents are not taxed on interest, dividends, or capital gains regardless of their source. Now for the tax rates for 2018, most categories of income, it's 5.1%. It will be going down in 2019 tax year to 5.05, but for 2018 it's 5.1. Short-term capital gains and long-term gains on collectibles will be 12%. Now, taxpayer will calculate this automatically for you, but it's good for you to know what the rates are. Filing status and dependencies. Now, they're going to be the same as federal, with the exception that Massachusetts does not have a qualified widower filing status. If the taxpayer used qualified widow on federal, then Massachusetts would use head of household. On the personal exemptions, single or married filing separately is going to be $4,400. Head of household, $6,800. Married filing jointly will be $8,800. Many of our taxpayers are 65 or older, so they will get an additional $700 per taxpayer. So married filing jointly, where both are 65 or older, that's going to be an additional $1,400. In the case of blindness, an additional $2,200, and for each dependent, $1,000. Taxable Massachusetts income. Now, as a general rule, everything is taxable unless it's specified explicitly that it's not. So there's a number of exceptions to things that are not taxable in Massachusetts. So interest on U.S. obligations like savings bonds or treasury notes, U.S. government pensions, mass, state, or municipal pensions, state and municipal pensions from other states that do not tax Massachusetts pensions or have some sort of mutual agreement. So for this bullet, we're going to usually have to look it up and see what the relationship is, what are the requirements for an out-of-state pension from another state. Social Security is not, and public assistance is not taxable in Massachusetts. Other things that are not taxable in Massachusetts, VA disability, GI Bill education payments, certain workman's comp, gifts, accident or life insurance, and certain payments received by Holocaust survivors, and military compensation for duty within a combat zone. Most information is entered with the federal is carried automatically to the state return. We do need to make some adjustments due to differences between state and federal tax law. And we'll go in through this presentation, we'll look at some of those things that we're going to have to make an adjustment as we go along. As we're entering the federal, we're going to ask you to use a worksheet to make note of the adjustments that you'll need to make once you go into the federal. It's very important to note that no information from prior year state return is carried forward automatically. So you'll see in the case where a taxpayer has come back from a previous year, we enter in their Social Security number, and a lot of information is carried forward from the federal. So their name and address and phone number, information for on the federal side from last year, but no information from prior year's state is carried forward. So we're going to have to make edits if there's information that's important that we carry forward from last year. So let's look at the Massachusetts TaxSlayer main menu. You'll see that we have a number of items from healthcare, basic information, all the way down to miscellaneous forms. We have the begin button if we haven't ever edited that, and then edit if we've made some changes in that section already. So let's look at basic information. So in general, we're going to carry the information from the federal side, name and address, and that sort of information. The only time we have to go into basic information is if the name or address changed from a prior tax year. And then we're going to have to select that first button and say yes to the name and address change. Also, if the taxpayer wants to make a contribution to the state election campaign fund, either the taxpayer or the spouse, they would also use this drop-down menu on the basic information form. So let's look at income subject to tax. So there's a number of sections here that we're going to have to fill out. In general, wages designated to Massachusetts from the W-2 are automatically pulled to the state return. So things like Social Security are not taxable, and so they don't need to be pulled forward. However, things like pensions, annuities, things you'd find on a 1099-R or certainly on W-2s, that will all move over to Massachusetts. By default, all of that will be marked as taxable. Same thing with any interest or dividends on a Schedule B, any capital gains on an E, royalties on an E, and that last magistrate lottery winnings, we would have to fill that out if there's anything applicable there. So in general, income from federal will automatically be considered taxable to the state unless we designate otherwise. And that's where this screen will come into effect. So let's look at each of these. For exempt pensions and annuities, as we discussed earlier, certain government pensions are exempt from Massachusetts income tax. So one example is a U.S. or Massachusetts or a city or town municipal pension. If we've identified that on the federal side, generally a 1099-R, we've identified that previously and it's taxed federally. However, we have to identify to the state that it is not taxable to the state. We're going to enter this non-taxable pension as a negative number. So when we enter the federal, we're going to note whether it's a municipal, state, or federal pension. And then when we get to doing the Massachusetts return, we'll enter it here on this screen as a negative number, and then that'll be deducted from their income. You'll see that TaxSlayer gives us this note down below. So if they only have one pension and it's completely, it's all tax-free in Massachusetts, you've got the number handy. Otherwise, if they have multiple pensions, you're going to have to keep track of which ones are taxable and which ones aren't, and just put the number in this box here as a negative number, the amount that is non-taxable in Massachusetts. It's very important, do not include out-of-state pensions here. There's a different place to make the adjustment. All we're doing here is U.S. federal pensions, Massachusetts state pensions, or city or town pensions within Massachusetts. All right, another adjustment we're going to have to make here is Schedule B adjustments. So this is interest and dividends. Common one we're going to hear is really lines 3 and 4. So interest and dividends non-tax to Massachusetts included on a federal return. Common example here is savings bonds or treasury bonds, which are taxable federally. So you put in a 1099 int and it's marked as federally taxable. However, Massachusetts does not tax those kind of instruments. So we're going to put in interest and dividends that's non-taxable that were included on the federal return. Make sure that you fill out both line 3, which is the interest and dividends, and line 4, which is a description. And so if there's multiple, you can abbreviate it so that it fits in the one line, but make sure that you put both, fill out both. If you actually don't put a description, it ends up not showing up on the return. So it's very important you fill out both line 3 here with the amount that's the interest or dividends that is not taxable, as well as the description on line 4. Now, in the case of prior year short-term carry forward losses, now here's one of those examples where on the federal side, if we did the return federally, carry forward losses get carried forward automatically with TaxSlayer. That is not the case with the state. If the taxpayer had an unused carry forward loss, we would have to explicitly put it. So you're going to look at last year's actual returns. Go look at the paper copy of their last year's state returns to see if there's unused carry forward losses. We put the short-term one on this screen. Later on, when we do the Schedule D adjustments, we'll do long-term. And again, the reminder to make sure, do the adjustments for taxable interest that's not taxable Massachusetts on this screen. There is a place on the 1099 int when you enter it on the federal side to identify what's not taxable to the state. Do not use that, because if you do, there's nowhere to put the description in that. So when you enter it, just enter it as fully taxable. It is fully taxable on the federal side, but on the state side, make the adjustment in this screen. All right, so here's a form that I keep it handy in my materials that I use when I'm doing tax returns. It was something that was developed by District 18, the Cape and the Islands. It's a very nice quick guide of what to do with the various types of interest. So for Massachusetts non-bank interest, it's both taxed on the federal, taxed on the U.S. on the Mass side. So there's no adjustments I have to make. Once you enter the 1099 int on the federal side, it will by default be taxable, considered taxable both on U.S. and Massachusetts. For Mass bank interest, there's actually a $100 exclusion if you're filing, married filing separately, head of household or single, and it's a $200 if you're married filing jointly. And in this case, you would go to additions to income on the second line. There's a box to say enter interest income included on your return received from Massachusetts banks, so that you can make the entry there. U.S. government bonds, so that includes savings bonds as well as treasury bonds. It's taxable to the U.S., not taxable in the state. And this is going to be the, as we talked about before, the income subject to tax, Schedule B, and we're going to fill that out on the third and the fourth line as we just showed. Massachusetts municipal bonds, same as for the government bonds. And then non-Mass muni, we don't have to make any adjustments because while they're not taxable federally, they are taxable to Massachusetts. So in general, if they're taxable to Massachusetts, you don't need to make any adjustments. TaxSlayer presumes everything's taxable unless you tell it otherwise. All right, in the case of Schedule D adjustments, this is if you have a long-term unused carry forward loss from last year. And again, the only way you're going to know this, you have to physically look at the last year's Massachusetts return and identify it as a negative number on this screen. Note, even if the taxpayer is returning TaxSlayer Online will not do this automatically. So you have to particularly look from last year's return and verify whether they had an unused long-term carry forward loss. In the case of Massachusetts lottery winnings, if when you entered on the federal side, there was a winning lottery gain, you can actually find out from the taxpayer what the price of the winning ticket was. They cannot include all of their tickets, like all the losing tickets, just the winning ticket, and it will get deducted. So that you can deduct just the price of the winning ticket. If they, $5 scratch ticket and they won $100, well, you put the $5 here, and so that Massachusetts will only tax them on the $95. All right, next section I want to go over will be additions to income. So some of them will be allocated tips, taxable scholarships, not very common, but it is one of the adjustments you can make. Interest income from Massachusetts banks is very common. Many returns will have 1099 int, which is interest, and if it is from a bank which has a physical presence in Massachusetts, you'll make this adjustment here. And then taxable IR distributions, that'll be covered in the advanced topics. There's a separate video that will cover that topic. So on mass bank interest, $100 exemption for single, married filing separately, and head of household, or $200 for married filing jointly. Any bank that has a physical presence in Massachusetts qualifies, but you can't have an online only bank. They have to have brick and mortar, an actual bank or branch you could go to in person. It doesn't have to have their main office be in Massachusetts. So if you have a bank that their main office is, in Rhode Island, but they have physical branches in Massachusetts, then you are able to exempt take this exemption. So you're going to go into the second line here, interest income included in return received for your Massachusetts banks. Enter the full total. So even if it's more than the $100 or $200, put the full amount, and TaxSlayer will do the right thing with what the exemption is that you're allowed. Okay. All right, next up we're going to cover deductions. So some deductions are taken automatically based on information imported from the federal side. Others require manual entry in TaxSlayer that we have to do ourselves. So on the mandatory retirement contributions, Massachusetts gives you a deduction for Social Security and Medicare, but those are taken automatically. So when you fill out the W-2, some of the entries you fill out will be what has been deducted for Social Security and Medicare. So TaxSlayer will calculate that automatically. What TaxSlayer does not do automatically is if you have a mandatory state or municipal retirement contributions, and generally you're going to find that in box 14 of the W-2 of a state or municipal worker. TaxSlayer will not take that automatically. You're going to have to manually make that entry. We'll show you on the next screen where you're going to do that. It is capped at $2,000 per taxpayer. And again, that's very important that you make the entries for what you find in box 14. You might find it as something called retirement. There's no standard way of writing it. So you may have to just ask the taxpayer if you see items in box 14 what they are. It has to be a mandatory contribution. If it's something voluntary, so they voluntarily contributed to a retirement plan, that is not going to qualify. It's got to be that it's mandatory. And again, the key is you're going to find this from the state and municipal workers in Massachusetts. So here's where the screen is going to look like. So you're going to say enter amount to adjust retirement deductions. Social Security, Medicare will already be pulled in. So if you have W-2 deductions from Social Security and Medicare, those are going to be covered automatically. You're just adding in the mandatory retirement from, say, box 14 of a W-2. It is really important that you allocate it properly, whether it's the taxpayer or the spouse. So this is one of those taxpayer and spouse each gets a maximum of $2,000 of a deduction. And so if one has 3,000 and one has 1,000, they don't get to share the 4,000. It's not like the mass bank interest where together they have a certain amount. This is each is capped at 2,000 total. So it's important that you identify it specifically, whether it's the taxpayer or the spouse has the additional box 14 retirement amount. All right, other deductions, student loan interest. This is for undergraduate studies only, and you want to only enter the part that was over the federal limit or that was disallowed for some other reason. Okay. Certain gambling losses. For Massachusetts, you have a deduction for gambling losses, but only if they are Massachusetts casinos. So for 2018, that's going to be the Plainridge or MGM in Springfield. For 2019, we'll be adding in the Encore Boston. But for 2018, it's just going to be those two, the Plainridge or MGM, and the deduction is limited to winnings at Massachusetts casinos. So can't take a deduction greater than their documented winnings. Other deductions, prepaid tuition or college savings plan. So these are programs that are established by the Commonwealth of Massachusetts. They are capped at $1,000 for single, $2,000 for married filing jointly. Commuter deduction. This is for either an Easy Pass or MBTA pass. Deduction for amount over $150 capped at $750 per person. So for each taxpayer and or spouse. So again, can't share it. It's got to be for each person. And again, the first 150 is not deductible, but you can go from 150 to 750. Out-of-state pensions. So here's another deduction. We talked earlier how government pensions, so either U.S., Massachusetts state, or a city or town in Massachusetts municipal pension is not taxable. And we already showed you how to make that adjustment. Out-of-state pensions are treated differently. These are treated as a deduction. You have to go into the Mass manual, and there's an appendix that you'll look up the state and will tell you how Massachusetts handles that. Some are fully taxable, some are partially, some are not taxable at all. And so no way to memorize this. You run into this, you're just going to go look it up on a per state basis. If it's not fully taxable, then you're going to enter the amount that's not taxable in this form. So the deductible amount of a qualified contributory pension from another state or political subdivision included in income. Okay, the default will be that it will be fully taxed to Massachusetts. So if it's fully taxed, you do not need to make any adjustment. It's only if it is partially or not at all taxed that you are going to go enter this. Again, this is out of the deductions menu, unlike what we did previously with the U.S. or Massachusetts state or municipal pensions. All right, let's look at some other deductions. You have children under 18 or disabled, dependent, or spouse care expenses, rental deductions, college tuition deductions, allowable business expense. Common one here is rental deductions. It's a very easy one to forget. So you want to make sure you're always asking the taxpayer if they paid rent. If they do, make sure that they take this deduction. So children under 13 or disabled, dependent, or spouse. These have to be employment-related care expenses. The age is as of the last day of the tax year. It's $4,800 for one, $9,600 for two or more. It's not allowed if married filing separately on federal. You can file married filing jointly on federal, MFS on Mass. And the spouses can split the deduction as long as the total is no more than $4,800 for one or $9,600 for two. For dependents under 12, 65 plus, or disabled, again, the age as of 12/31/18, as of the last day of the tax year, it's 3,600 for one, 7,200 for two or more. It's not allowed for the taxpayer or the spouse. It's not allowed if married filing separately, and it's not allowed if the previous deduction is taken. So you can either take the child under 13, disabled dependent, or spouse care expenses, or you can take the dependent under 12, 65 or older, or disabled deduction. So there are one or the other. TSO will automatically take the deduction. Rental deduction. You can take a deduction of 50% of rent paid for principal residence in Massachusetts. It is capped at $3,000 for single, married filing jointly, or head or household, capped at $1,500 for married filing separately. It is allowed even if taking the circuit breaker credit, and that's something we're going to go over in the advanced section. Often we tell you no double dipping, but this is an example where you can take both the rental deduction as well as rent circuit breaker if you qualify for both. Easy to miss. Remember to ask all taxpayers. It is very, very easy to forget, and it can make a significant difference for Massachusetts taxpayers. So you're going to enter the qualified rent paid during, in this case, this is from 2018. Make sure to include the rent paid by the taxpayer during the year. It is okay if the rent is partially subsidized. Just include the portion that was actually paid by the taxpayer. The other thing is, a lot of times someone will come in and say, oh, I'm paying $1,000 a month, and you'll say 1,000 and you multiply it by 12 and you'll put 12,000. However, double check that they paid that amount through the whole year. Sometimes rent changes mid-year, and so you have to, say, oh, all right, well then before September 1st, what were you paying? And then multiply it by however many months, and then how many months at the new rent. So it's very common. Usually, these rent, if anyone's paying market rent, it's going to be over $3,000. Well over $3,000, it ends up not mattering. But you want to make sure that it's accurate, and that if they do get a letter from the Department of Revenue, they can substantiate the number that they put on the return. All right, let's look at credits. Okay, we have our non-refundable credits. Now remember, from the federal side, non-refundable credits can reduce our tax liability down to potentially zero, but can't go below zero. Refundable credits can reduce your tax liability even below zero, meaning you would actually get money back. So for non-refundable credits, we've got under our scheduled CMS credit management system, we've got the septic credit, and that's scheduled SC. It's a maximum of $1,500 annually for meeting the Title V requirements over a period of 4 years. So that would be $6,000 maximum. There's also the lead paint credit, that's Schedule LP, the maximum of $1,500 for lead paint removal costs. On the refundable credit side, the key ones: earned income credit. The earned income is a case of less than $54,884. It's going to be 23% of the federal earned income tax credit. TSO will calculate it automatically, but it's good to be familiar with the numbers in the bracket, so that you can explain it to the taxpayer whether that they were entitled to get it or not receive it. And then the big one we do a lot of circuit breaker. I know in our district we do 30% of the returns will be circuit breaker. This is a credit given to credit back for real estate taxes or market rate rental for seniors 65 and older in Massachusetts. We're going to cover that in the advanced topics section, or you can see that in the separate video. So here's what the credit menus look like. The ones that we'll typically see, and again, circuit breaker down here, the second to the bottom is probably the most common one that you're going to see, as we do for a large percentage of our of our taxpayers come in for this senior circuit breaker credit. All right, then we're going to cover Massachusetts healthcare information, what's called Schedule HC for healthcare. Taxpayer and spouse age 18 or older are expected to purchase affordable health care insurance. Dependents of any age are not required to have coverage. Penalties apply monthly for non-compliance. The penalty is zero is if federal penalty is greater than Massachusetts. Now in 2018 there is a federal penalty. So in most cases, the Massachusetts penalty will be zero because the federal penalty is greater. Starting in 2019, the federal penalty is going to zero, so it'll be more common that we'll see a Massachusetts penalty. But we're going to cover that in more detail in the advanced topics. Insurance must meet what's called minimum credible coverage standards. You'll see that MCC in the various documents and forms that we use. So Form 1, Schedule HC, must be completed for taxpayers and the spouse if married. Insurance provider, provider EIN, subscriber number for private insurance. We're going to get that from the Form 1099 HC, which is a Massachusetts form. Medicare, VA, military, or other government insurance coverage for any period of time is equivalent to full year coverage. So if someone comes in and has that, select full year MCC. Even if they had it for just one day. And however, this is not applicable for Mass Health. Okay, so Medicare, VA, but not applicable for Mass Health. We get a separate box for that. So Form 1099 HC. Not all taxpayers will receive them. So it's important for you to be comfortable when we're going to see them and when we won't. So if they have private insurance or if they have Mass Health, and the income is above 150% of the federal poverty level, they'll see, they should receive a 1099 HC. They're not going to get a Form 1099 HC if they have Medicare, military, or other government insurance, or if they have Mass Health and their income is at or below 150% of the FPL, the federal poverty level. Okay, so don't be confused if they, some have it, some don't. Large percentage of our taxpayers, certainly in our district, have Medicare, and so they're not going to have a 1099 HC. So we're going to pull up the Massachusetts healthcare form from menu from TaxSlayer, and you'll see the first two questions, basic questions and health plan information. We're going to only need to fill out those first two sections if the taxpayer and spouse, if applicable, has full year MCC. You're going to answer a couple of questions here. Are you 18 years or older and a resident or part-year resident of Massachusetts? And then indicate the time period you were enrolled in minimum credible coverage MCC. The choices here are full year, part year, or none. So if full year, answer yes, and full year MCC, again, for taxpayer, and if it's a married filing jointly return, also for the spouse. Then you're going to go into the health insurance plan information screen. Again, this is the second one down. There's a number of options here. You really think of these as 4 pairs of boxes for taxpayer, spouse, taxpayer, spouse. If this is a married filing separately, single, or head of household, you're going to just see a taxpayer box for each of these 4 sets of questions. If the taxpayer has Mass Health, Commonwealth Care, or Commonwealth Bridge, you're going to answer yes to first set of boxes. If they have Medicare, second set, and again, majority of our taxpayers are on Medicare because they're 65 or older. Third is military coverage, VA or TRICARE. Again, a lot less common, but certainly possible. And then the fourth one is do you have private insurance? This includes employer provided, and it includes insurance that the taxpayer purchases from the Mass Health Connector. Now, one thing you may see is someone may come in with Medicare, so that's these boxes up here, but they also have a private supplement. If they do, just put yes to Medicare and don't enter yes to the private down here. So just yes is here and you're done. Massachusetts requirements, if they have Medicare, even for one day, they have met the Massachusetts requirements for health insurance. And so don't answer yes, don't provide any additional information on the private insurance because you run the risk of having the return rejected if there's an issue with it. Private insurance. So in the case of private insurance only, and again, this is not the case where they have Medicare and then a supplemental private insurance policy. This is just private insurance is their only insurance. If they were not issued a form 1099 HC, then you would answer that question yes. You're going to enter the name of the insurance company. You're going to enter the federal identification number of the insurance company. You can get it off of the 1099 HC if they provided it. If they don't, then just leave it blank. You're going to put the subscriber number, which if they've provided a 1099 HC, you're going to fill out the subscriber number from that form. If they don't have a 1099 HC, you've answered this question yes. See if they have an ID card from their insurance company. You can get the subscriber number from there, or check last year's return and see if they have the same insurance company as they had last year. But ultimately, you have to provide the subscriber number for this form. All right, so in Massachusetts healthcare, there are some special circumstances. So if the taxpayer or spouse turned 18 during the tax year, then the requirement to have health insurance applies on the first day of the third month after the birth date. This is not applicable for dependents turning 18 during the year because, again, there's no requirement in Massachusetts that the dependent has to have insurance. For part year, similar, the mandate applies first day of the third month after becoming a Massachusetts resident, or if they're leaving Massachusetts, they're required to have insurance up to the last day of the last full month of residency. If the taxpayer dies in the middle of the tax year, the mandate applies up until the last day of the previous month. So they died in middle of July, they're required to have insurance until the last day of June. If the taxpayer has insurance for all of the time that they're required to have insurance, then you should fill out full year MCC when you enter their health insurance on the first screen that we pull up in the health section. It doesn't matter that they didn't have insurance for 12 months. If they had insurance for all the months of the year they were required to have insurance, you should say full year MCC. Now, there's 3 additional boxes in the healthcare section: months covered, exemption questions, and affordability questions. These are in the case that the taxpayer does not have full year MCC. And we're going to cover this in the advanced section. There's a separate video that we'll cover when we'll go over that. All right, let's look at some additional tax information. So we have use tax, and this is going to be owed for purchases out of state. Also is included untaxed internet or online purchases. Might be prudent for taxpayers living near border states with low or no sales tax, like for example New Hampshire. You can either calculate it from all receipts, or you can use what's called the safe harbor amount. So in the case of use tax, if we're going to use the safe harbor amount, you can just say, do you want to report a safe harbor amount? You say yes. You want to identify if there are any purchases of $1,000 or more in addition. And then if you paid taxes to another state or jurisdiction for sales or use tax, you will get credit for it as well. So this may be prudent for taxpayers living near low or no tax state, or if they're making untaxed internet online purchases. Let's look at payments. Now, withholdings are automatically pulled from W-2s and 1099s. There is an option to apply a refund to next year's tax return, and there's an option if taxpayer applied last year's refund to this year. Very important to know that on the federal side, if the taxpayer returns, so they came in from to the same center from previous year, and they applied their refund last year to this year, TaxSlayer will carry that over. That does not work on the state side. If the taxpayer applied their state refund to this year's state taxes, that does not automatically get carried forward. You have to notice it, and usually the taxpayer will remember it, or often they'll remember it and they'll remind you. And so make sure that you note whether they applied last year's refund to this year, and you're going to have to enter it directly. I would recommend if they do this for next year, so they apply this year's refund to next year, mark it on the folder on the white envelope quite clearly, so make it easier for the tax preparer next year to note that, or you can add a note in their record so that the counselor next year realizes it in case the taxpayer forgets to tell. So let's look at some resources that are available to us. Many resources are available on the Mass Tax Aid website. There are links to the IRS and Department of Revenue forms and instructions. Mass Manual, invaluable to be able to do tax returns for Massachusetts. This is the key document you want to be able to reference. There's the Scope Manual for Massachusetts returns to make sure that you're correctly identifying what things are in scope and not in scope specifically for Massachusetts. There's the workbook, which is a set of practice problems, and a link to tools and calculators that you can use. Highly recommend to sign up for the blog updates, so then that way when there are updates to the blogs, notices, you'll get that automatically by email. So here's what the Mass Tax Aid website looks like. You'll see that there are a number of tabs with training, reference materials. There's a section for volunteers only. You're going to find these videos under the volunteer section, as well as the workbook. All right, Massachusetts worksheet. There is a worksheet available on the masstaxaid.org website. In our district, we do use one that's a little bit more detailed. Doesn't really matter which you use, but it's probably a good idea to pick one within a given site. So then that way the counselors and the people doing the quality review are all familiar with and are using the same one. You want to use one of these worksheets to keep track of the Massachusetts differences as you're doing the data entry, as you're doing the federal return. You're making note of the things that will need an adjustment once you get to the Massachusetts tax return. So you don't have to go through all the source documents again once you get into the Mass state return. So here's the one that Massachusetts looks like. Again, you can look at this, bank interest, exempt interest, taxable IRA distributions. This section here for using the circuit breaker, which will show you how to fill that out on the advanced circuit breaker. You'll look at the tax exempt government pensions. These are U.S. federal, Massachusetts, or municipal, and then here is where you're going to have the state and other state pensions that may or may not be deductible. You'll see the carry forward losses, the short term and the long term. You'll see these numbers in yellow, and they'll reference on the second page. You'll be able to fill out what they are. The other thing that's really nice about this worksheet is once you figure out what these numbers are, you can see the TaxSlayer entry screen where to make those adjustments. So sum of Massachusetts bank interest, you're going to go additions to income. If I'm going to say interest and dividends not taxed in Massachusetts, I'm going to go to the income subject to tax menu, and I'm going to go to the Schedule B. Make sure that we put the description on it. Again, You can use any of the worksheets that are out there, but you want to make sure that you're documenting all the changes that you have to make for any of the adjustments you have to make for Massachusetts. Okay, well then that wraps up the core section of the Massachusetts returns. We're going to cover 3 advanced topics: the schedule circuit breaker, the schedule HC for healthcare in the case of non-full year MCC. And then there is one adjustment we're going to make for taxable IRA distributions where there is some special calculations you need to make. So there's 3 separate topics in the advanced section that we'll cover. Please contact us if you have any other questions. We're happy for feedback or improvements to these training slides. Thank you.